Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you on this Monday for our weekly wrap-up. Graham, what's been going on in the market this past week?
Well, you've had a pretty up and down week. We had a lot of comments that came out of Jackson Hole Symposium from Chairman Powell, Federal Reserve Chairman Powell, and I'll get into those comments in a bit that caused some volatility in the market. But all in all, we saw the Nasdaq up about 2.25%. The S&P was up just under 1%. We did see the Russell 2000 tick down just a little. Regional banks, probably the biggest underperformers, they were off because of a downgrade from the S&P Global, but still saw 7 of the 11 S&P sectors gaining ground, led by, surprise, surprise, technology. If we look at Treasury yields, at least on the short end, we did see a bit of a rise on the short end based on some comments from Chairman Powell.
What message do you feel that the federal chairman was trying to get across?
Well, I think they basically said that, listen, we still got some pretty strong economic growth right now, so we might still need to raise rates to kind of tamp it down so it doesn't come back up or resurge itself. But at the same time, they're acknowledging that where they've raised rates to this point is restrictive, and they know that. And I think that what they were really making a statement on is that they want to proceed with caution. They want to see how the rates that they've already put in place is affecting demand, and they'll wait and see. But that doesn't mean they're not going to raise rates in September. We're just not 100% sure yet. But on another note, Stacey, we did see U.S. business activity nearing some stagflation in August, so that might be good for the Fed in terms of overheating. They wanted to not overheat, right, to stay relatively tame. So we saw durable goods orders, excluding volatile transportation, increased only slightly, so that wasn't a huge bump. We did see some cautious capital investment, so I think that's good on the inflation front. Interesting enough, we saw some housing data pretty much mixed across the board. We saw new housing sales up about 4.4% in July, but existing homes fell about 2.2%. And we did see a slight uptick in the median sale price on the home to about $406,000. Mortgage applications continued to sink as those 30 years popped up over 7% to 28-year lows.
All right. What about the international market?
Yeah, I think China is still struggling quite a bit, maybe disappointing some investors over there that maybe they weren't more aggressive with their interest rate lowering at this particular point. Japan's BOJ showed really a nice little spike. I mean, nice, is that the right word to say this? But maybe a little pop in their inflation rate year over year to 3.3. I think they were expecting 3. Europe, Germany, Britain, listen, they're struggling here with growth, so they might be at or entering a recession at this particular point.
All right. Well, thank you so much for that, Graham. And thank you to everyone who joined us today. We would like to throw a couple of reminders out to you. We have our monthly webinar scheduled this Wednesday at noon. And our topic this month is something that you're not going to want to miss. It's the steps that you need to take if you're at or near retirement as you plan that process. And also, just a quick reminder that our office is going to be closed next Monday in observance of Labor Day. So we hope you all have a very safe and happy weekend, and we'll catch up with you when everyone gets back to the office. Thanks and have a great week.
Take care.